Hello, everyone. Thank you for joining us. I'm sure you've heard a lot about crypto over the last 10 days, and we're here to keep it going. This panel was going to look a lot different before the FTX saga, but now we have something that is timely and prescient that we can talk about here today. We have a great panel. I hope you all enjoy the discussion. We're going to try to keep it very free-flowing and exciting, and hopefully we can find a few tidbits in here that you guys will really enjoy, and hopefully you'll learn something new. So I'll start with Darius. Darius, I know that you recently wrote a blog post about all the FTX saga. I'm curious, can you help us understand from the perspective of a non-crypto person, what happened here?
Yeah. Maybe I'll just do a very quick introduction. My name is Darius. I'm the founder of QCB Capital. We're a crypto trading firm, and we provide institutional trading solutions and strategies for our clients. So, we've been in the space for more than 5 years now. And we've actually known Sam and FTX since before FTX, Jehan as well when he was in Hong Kong. So we've seen the whole evolution. I think, you can find the blog post on our website, qcb.capital, but I'll summarize a little bit. In a nutshell, FTX used their client funds, which should have been safeguarded, to do trading, as well as massive investments. And as a result, created this liquidity gap that has now been impaired and they're unable to fill it. But if you take a step back, I think this behavior was seen already before FTX, right? He took a lot of leverage, and FTX was actually the solution to plug some of that gaps as it was. And most of the industry players, seeing how much that he had raised, how profitable the exchange was, and the kind of names that invested in them, and that instilled a lot of confidence in the broader crypto community, and that's the reason why the size of it is so big, because that confidence allowed people to put assets on the exchange, and every trading company, including ourselves, were trading there as well.
Yeah.
So the effect and the damage is very, very widespread.
And Ryan, we'll go over to you. I know that you've been investing in crypto since really the beginning. I'm curious, do you think this was predictable? I know that you have a focus on crypto native infrastructure and tooling. And so I'm wondering, was FTX as a centralized exchange antithetical to crypto?
Yeah, and I think that's a great point. That there were many signs over the years that something was not right here. And, the wide sweeping organization that had obviously cross-contamination across a number of different entities. But more particularly, I've been talking with a number of OGs in the space over the last few weeks and months, and the refrain that kept coming up over and over again is that he seemed really inauthentic. He didn't really seem to embody crypto values. He didn't really seem to be here to like build and be part of this community in a crypto native sense. And really, the most, I think, telling symptom that we saw is that this represented a lot of the things that we stay away from as crypto natives in the space. The interesting thing, both intellectually and alpha and performance-wise in this space, is never the top-down, the corporate, the celebrity-driven, the opaque black box with the nice UI. It is always the grassroots, bottom-up, community-driven, fully decentralized, and that is really what we lean into as crypto natives. And so, yeah, there were many symptoms over the course of the years, and fortunately, or unfortunately, it will spread across the space, and even people who were not involved in FTX like ourselves will be affected
Yeah.
quite significantly.
And Jehan, we'll go to you. So this word crypto has kind of become synonymous with cryptocurrencies and blockchain. And so I'm curious, there's surely going to be a ripple effect from FTX around cryptocurrencies. I think we've started to see that now. I'm wondering whether you think that the actions of the last 2 weeks will impact blockchain adoption.
Yeah, for sure. I mean, this whole debacle sets the entire movement back by, a year, 2 years, but in certain ways, right? Most of what happened was really relegated to the financial side of crypto, the financial side of the industry.
Yeah.
In the meantime, you have a lot of things happening in the content side. You have things happening in the technology side, which are tagged with the same kind of tainted brush, but are still kind of moving ahead and still can move ahead. I think that one of the biggest problems and what some of the largest kind of collateral damage that comes from this entire scenario is actually how deeply FTX was in bed with brands, sponsorships, just splashing around tons of sponsorship dollars, and just basically poisoning all of those types of relationships. A lot of the brands won't come back, or at least will have to kind of really think twice before they take crypto sponsorship dollars. And that side of it is really kind of sad, because we could have gotten so much further in terms of mainstream adoption, mainstream assimilation, and just acceptance of the space. And now we have to kind of start over again. But fortunately, I think the technology side continues. I actually do think that the brands who weren't involved are still interested in blockchain technology. But I think there's something to be said about non-cryptocurrency applications of the technology, and we can kind of touch on that later.
Yeah. I mean, for sure, we've seen the FTX logo being ripped down from the Miami arena already. So I would say it's worse than having to start over. You're starting from a negative point, a negative public perception. I'd love to just jump into some conversations here. So Darius, I'm going to fire one over to you. You talked about how we got here, what happened with FTX. Do you think that what Sam did was illegal? And do you think he's going to end up in jail?
That's a very tricky one. I think it is illegal. Whether he ends up in jail or not, I don't know. That one is up to the legal guys to deal with. But unethical, illegal for sure.
Yeah.
A lot of folks trusted him with the money, and if you look at their terms and conditions, that those assets are held in trust and are not meant to be used for other purposes. So I think that definitely is the case. And yeah, I think the space has been set back quite a bit. According to CZ, he thinks it's about 3 to 5 years, right? So it's a very long time in crypto. Wow. So he initially thought pre-FTX, he thought about 1 to 2 years. I think with this, he's thinking 3 to 5 years. So definitely a big setback. But I think there are bright places in the space, bright segments. Even though FTX was a big trading venue, I think the trading markets have still been functional.
Yeah.
Settlements have been okay. OTC on other exchanges. There's still a lot of interest in trading derivatives, trading spot, and I think that segment of the space gets more and more institutional. Especially with this, it would accelerate how things are being done, right? In terms of risk management, credit management, and settlement.
Yeah, I mean, traders will always trade for sure. It's interesting that CZ says that this will push things back 3 to 5 years. I mean, Ryan, I'm curious, going to you. Do you agree with that? Like, what happens from here?
No, so we do have to remember that crypto is probably the fastest moving industry on the planet.
Yeah.
And so I do think that it'll recover faster than we think as well. There is a contagion to work out through the space. This situation actually reminds me of 2013 in Brazil, when the Ike OGX empire collapsed. And there was a lot of people running around grave dancing in that situation as well. And I was kind of saying to a lot, I don't think you realize how much this economy is tied to this one man. And in this situation, Brazil went through a lost decade economically. And in this case, I think we'll have to do the same, but we will accelerate it because the industry moves so fast. And as we move forward, I'm optimistic that we'll lean into sort of the authentic values that that fostered the industry to begin with, and in the long term, that can be quite positive for self-sovereign identity and custody of assets.
Jehan, I know that you are a prolific investor in the space. I know you've been deploying capital in the space for many years. Does this change your strategy? Are you excited now that you're able to deploy into a newly reset market, or are you cautious?
I'm conflicted. I mean, on one hand, it's great to see more rational rounds, more rational valuations. It's great to see there be more space and time for consideration about investments, and especially for founders to have that space where they're not kind of rushing from pitch meeting to pitch meeting because they feel like they have to raise, before the kind of window closes. So that's good. On the other hand, I just feel so sad about, the industry, and that it turns out that, at worst it's a bunch of criminals, too many criminals, and at best it's, kind of like Icarus syndrome where everybody's just trying to touch the sky like so quickly that everybody gets burned. And the sky falls down like every year or 2 years. As far as direction, I mean, we stay the course. We've always been hyperlateral in terms of our investing thesis. We invest in everything because everything converges back to the blockchain. So we slow down a little bit. We spend more time. But I think in addition to looking at all the kind of crypto and blockchain technologies and founders, we also start to look beyond crypto and really focus again on non-cryptocurrency solutions. Now, it's not as sexy, it's not as high alpha, it's not the 1,000xers that you're going to find in some of the projects that we invested in. But I do think that it starts to consolidate into a more interesting version of the future, a non-cryptocurrency public blockchain arena, which is appropriate for enterprise and appropriate for government. And may be more attractive for some of the Web 2 devs, engineers, and talent that are coming over and considering blockchain space.
Do you guys not feel that as this washes out, there's going to be a generational buying opportunity where we can lean into the quality in the space? For example, we're going to probably see ETH back at 2018 prices or maybe even early 2017 prices. And in comparison to the extraordinary amount of infrastructure and apps and community development that's been done over the last 5-6 years, and in that regard, there's going to be an opportunity to lean into these value principles of what you're willing to buy at 3,000. You'd be even more excited to buy, say, below 1,000. And do you not both look at this as, or all three of you, because Alex, you're experienced and fantastic investor in the space as well, but do you guys not look at this as an amazing buying opportunity to come on the horizon as this washes out?
Oh, absolutely. I think, for us specifically, and the investment thesis has already been changing since. This year is not just FTX; it's a lot of after FTX type, seismic events in the space. And we had, after Luna and after Three Arrows, we started changing the thesis. I think this is just our take personally that we have pulled back away from tokens, starting to reassess the value accrual in the token system, right? Especially stuff like governance tokens. It's become a bit harder to value, especially given that the speculative element of it has been shown to be a very, very big portion of it. So we pull back on that and we look more, double down on what's closer to our core business, more capital markets types projects or companies, trading infrastructure, venues, as well as data is what we're doubling down on. And we've already started to see some opportunities like this emerge. One example for us is Deribit, right? It's a crypto company trading in cryptocurrency options, and it's a positive cash flow business. It makes about $200 net profit a year. And a recent round that they did was at a 400 million valuation. So you start to see some very, very of this kind of high value investments that you talk about. And I think more and more of these will start to emerge, companies and projects that have a very, very good value.
Yeah, I totally agree with you. I think that we're also kind of reconsidering how essential tokens are to all the projects that we invest in. You see it even in 2020, early 2022, you saw a lot of rounds that were completing where the ask would not be, okay, well, give me a SAFT, but give me a safe with token warrants, right? So that people are already starting to hedge. Maybe these tokens aren't going to be worth anything, but at least I'll have the equity. So I think that we'll start to see more of a shift into equity, and that will necessarily, have investors demand that value accrue directly to the equity more and more. And so I think we start to kind of move a little bit more over to like SaaS blockchain. Again, not sexy, but I think that is ultimately where a lot of the space kind of ends up, where we still have a lot of token-driven projects, but many fewer than before, with much higher bars for, and much higher standards for how value accrues. Because tokens are going to have more and more friction, and you're going to have to get extreme alpha in order to kind of justify that friction of taking, betting all your money on tokens.
That's interesting. I mean, we're talking about like blockchain applications generally, and it seems like most of the comments are focused on, or at least Darius yours, focused on like trading infrastructure. But what about like non-trading applications of blockchain? Like, are there like what comes next?
Well, I mean, the things that I find really most inspiring in the space is the really amazing story of play-to-earn gaming, where people have been able to around the world, and really it started to catch fire here in Southeast Asia, but people are able to lift themselves out of poverty by playing a game and replace their manual labor or very difficult job that they had before by playing a game like Axie Infinity. These are not speculative users. And really, play-to-earn gaming has been the first use case that has brought in these non-speculative, sort of incipient users into the space. Also, NFT art, the crucible moment where digital artists are finally able to take their rightful place in art canon because there is now digital scarcity that can be applied to their art so it can be collected. The way that the number of rags to riches stories that we've seen in art, Jehan and I over the last few years, has been incredibly inspiring. And so these use cases are not going anywhere.
Yeah.
In fact, they're continuing to gain traction, and we remain incredibly excited about them and continue to deploy capital in that regard.
Yeah. What about the institutional adoption of crypto? Like play-to-earn games, I understand. NFTs, I understand. Trading, I also understand. You're a hedge fund, of course. You want to trade. You'll trade anything. But like, let's talk about other financial institutions.
So for me, in a few weeks, I'll celebrate a decade in the space. And for the entirety of this decade, I've been hearing the institutions are coming, the institutions are coming, and the institutions are coming. And the reality is that OGs have moved the markets for this entire time, and that's going to continue to be the space or the interesting thing. And these crypto native use cases, I really continue to believe that this is where the intellectually compelling area is, and it's where the alpha is. So for example, with respect to tokens, there are lots of tokenized projects that are throwing off great cash flows now. Whether it's Lido or GMX or many others, you can start to value these projects, and we're going to move into an era of valuing these projects like companies based on their cash flows. And so I definitely invite this more coherent valuation era, but I remain skeptical that the interesting thing is to bridge Web 2 and bridge traditional banks and bridge the legacy world. The tip of the spear, deep down the rabbit hole, is for me, the most compelling opportunities in the space.
What about, so we've touched on digital assets. Ryan, I've heard you on institutions. Maybe they'll never come. Do you think that this idea of bringing real-world assets on-chain, having KYC on-chain, and being able to just trade up tokenized securities, like this is another future that we've been talking about for 5 years now. Tokenized securities, they're coming, security tokens. They haven't come. Do any of you think that might be the gateway for institutions to come?
I think it's definitely one of the gateways. We actually, I'm both proud and embarrassed to say that we started investing in security token infrastructure and security token platforms back in 2017.
Yeah, which ones?
So we invested in Satis, which was a consultancy that did I think they did Spice VC, which was one of the earliest tokenized fund offerings. We're seed investors in securities, which is arguably the kind of market leading. So I think that, again, it's perpetually, about to arrive. But I will say I was super encouraged by the KKR fund issuance. I think that is a really big step. And from what I've heard from the industry, it does give kind of air clearance for a lot of others to come in. And I think that we will see more. But it's going to be a dribble, not a pour. And I think that it will take time. But once they figure out they can actually make money, they can actually find retail investors for their products, it will come further. But I actually think that the format will change before institutional adoption arrives. So I'm looking forward to a time when kind of NFTs really dominate the security token narrative rather than kind of fungible tokens. But it's still way too fragmented. It's still way too geographically, jurisdictionally specific, and it's going to take a couple more cycles, unfortunately.
Wow.
I mean, on our end, what we see is, you're right. The most obvious institutional participation has been in the trading side of things. And I mean, ironically, in the worst downturn, we have started, we've been talking about institutions participating in derivatives markets for many years. But we saw some real movement this year around July, August. I mean, one of the largest traditional market hedge funds, right? In August, they, over the merge narrative, ETH merge narrative, they were responsible alone for half of the Ether options volume in the listed market, right? Just one single firm. And there are a few more of these coming on. So, you're going to see a multiplication of that. So that's a very obvious one, like you said. Hedge funds are going to trade, and they will trade anything that moves. The thing that I think would make a very big difference is if the institutional guys, like the banks, get involved in the credit markets, because that has been the biggest, rather before FTX, that was probably the biggest blow up in the space. It was a credit crisis, right? Loans getting defaulted. And I think the big piece there was that, the big piece missing there was that it grew to a multi-billion-dollar segment of the market without any institutional participation. And I think that the missing piece is actually getting the banks, getting the TradFi guys involved in the crypto credit markets, whether it be on DeFi, permission DeFi, or whether it be through, participating directly with crypto players. I think that's where we sort of plug the gap and see a good bridge, as the space grows more sustainably.
I would argue that actually institutions are already kind of, already in many ways. Like consumer brands are already in. They're doing things like Adidas just did another drop of NFTs. All of the large, like many of the large kind of clothing and athletic brands are in. They're continuing to kind of march in. If you think about for the governments, right? Other types of institutions, the Hong Kong government is kind of very doing a lot of things in the industry. The Dubai government is. There's a lot of governments who are already kind of pushing inwards, and it's not obviously crypto, it's more blockchain on the back end. So I would argue that actually even outside of the financial space, institutions are marching in, and it's just at their own pace. And crypto the FTX sets it back, but I think they're still finding ways to kind of utilize the technology. So I'm actually encouraged.
Ryan, what do you think?
So for a few years, in 2019, I wrote an essay predicting that there would be two superhighways in crypto. One that would be a fully regulated, fully transparent, fully KYC'd highway that would have CBDCs and security tokens and things like that. And then there would be sort of this Badlands superhighway where it would be full privacy and sort of full open unmitigated transactions across disparate parts. And I think that is still going to play out, and we're starting to see that. And that, as these two superhighways take shape, for me, one of the interesting things will be the bridges between the two, and how those unfold. But certainly, regulation is going to play a much bigger role in that sort of aforementioned superhighway of that will be fully transparent and government controlled, so to speak. And so we're going to have to see how regulation plays out in the space over the next year. I do think that there will be some more precipitated action in the next little while. And so I remain optimistic about both of these highways and the use cases on each one of them, as well as connecting the two.
Yeah, and I think you brought up a good point about regulation. we've also heard for the past many years, regulation is coming, and it does seem like still broadly most other countries follow the U.S. And so it seems like with FTX, maybe this is the catalyst for the U.S. to actually come in and expedite regulation. If they don't expedite it, it's still going to be 2 years, right, at least. And so they'd have to really expedite it. And so I'm curious, like, what does that regulation look like? Like, if any of you have a specific opinion there, like, what do you think is going to be maybe the single most important piece of regulation that's going to come from the ashes here?
I think there's an elegant way to do this, and then there's an inelegant way to do this, right? Don't take a sledgehammer to where you need a scalpel. And the elegant way to do this would be to coherently regulate what are otherwise black boxes, like exchanges or major hedge funds, and to a large extent within the U.S. they are regulated.
Yeah.
What we don't need is something that is already on-chain, cryptographically verifiable and transparent, like DeFi, for example, to have the same type of regulation that a black box exchange has. That would not be an elegant solution, and that would hold back innovation. I'm cautiously optimistic that regulators around the world are actually very thoughtful about this, because they don't want to push off their shores one of the most important industries of this generation. And so while I'm skeptical that we won't pay a big price in DeFi for these recent events, I am hopeful that DeFi will survive and will flourish over time.
No, I think that DeFi piece is a big important one, and that's a piece that the regulators are still sort of trying to understand.
Because Sam, just interrupt you for a second. Sam got into a lot of hot water when he said that regulators should regulate the front end, right? They should KYC the front end of all of DeFi. And that was when Eric Voorhees kind of said, no, that's absolutely antithetical. So I'm curious what you think about that.
I mean, I personally feel like DeFi, to regulate DeFi is a bit, it doesn't make sense. It's meant to be a fully democratic, fully accessible piece of technology and, a network. So I think that's going to be a very challenging piece that the governments are going to deal with, for
Is
quite
that
a while.
a really viable option? An unregulated
Regulated DeFi?
Unregulated DeFi. Like, is that really?
For certain kind of portions of the world, sure.
Yeah.
I mean, if you always want to be looking over your shoulder, kind of 10, 15 years down the line about things, rules that you may have violated, then sure. So I think that what we see is kind of a bifurcated capital pool or a kind of economy where you have regulated DeFi. Like for me, I feel like rightly or wrongly, 75% of DeFi within 5 years will be regulated.
Yeah.
The other 25% will be as we have it: wild, cowboy, anonymous, decentralized, values-driven. But the vast majority of the value is actually going to be in the regulated side, and it's not going to be like regulated Uniswap. It's going to be Citibank, which is offering 10 products, and 2 of those products are going to be using some type of DeFi native instrument inside, which is kind of distributing resources or kind of aggregating resources from the crowd, and everybody in the crowd is going to have to be KYC'd. So I see DeFi as a tool set which will be used by institutions, and rightly or wrongly, whether we want it, that's the future that we get.
Interesting. Okay, so that's a great segue into kind of this next question. So we're talking now about the future. Let's say that we fast forward 10 years into the future, okay? Each one of you, crypto plays out as good as it possibly could in your own mind. Everything happens that you want to happen. Like, this is your version of crypto utopia. 10 years from now, what does that look like? Jehan, we'll start with you.
What I want is the future that we were promised, right? It's Vitalik's vision. It's all of the kind of the original forefathers and foremothers of the space. Decentralized, personalized, self-sovereign, transparent, efficient. That, but it's unlikely that we get that. We're going to get some kind of bastardized derivative of that, which will be regulated. So I would love it if we were to be able to be in control of our own kind of assets, our own future, and I think that we'll get some of that.
Darius?
So I think this is something that we mentioned in the blog post you mentioned as well in our research. It's a bit like the internet, right? When the internet first came up, people were speculating on internet companies, and internet companies went boom, bust. And then 10 years later, what we see is that it's not so much, not specifically that that the internet only exists with internet companies. Every single company in the world now, and every single person in the world now is on the internet.
Yeah.
And every single company is an internet company in some way or other. So I think that same parallel, and hopefully the same price trajectory for crypto as well, maybe in a more compressed manner, that in 10 years' time, every single company is a crypto company, whether it be some part of their enterprise, operations, or it be some payments, or some form or other that we might not even be talking about yet. But every company will be a crypto company. Every person will be using crypto in some capacity in their daily lives. I think that is what is going to happen. The trick is going to be identifying exactly what those applications are. But I think our angle is that crypto, unlike the internet, I guess there's always going to be an embedded capital market element to it. So in a world where every company is a crypto company, and I think there's always going to be some involvement with tokenization as well as capital markets, and we want to be there to sort of provide those solutions.
Ryan?
So I tend to continue to believe very strongly in the inspiring future of Web3. That in a decade, we will have a system of opt-in for, say, central bank digital currencies, but we'll have a series of open source, zero-knowledge tools that will allow for private transactions as well. I believe very firmly that play-to-earn gaming represents the best first attempt at universal basic income, and that will evolve. I certainly believe that NFTs will consume all capital assets over time, that the capital efficiency that will be driven from that will unlock incredible value for the world and individuals and corporates alike. And I certainly believe that we will have more self-sovereignty over our digital lives in the metaverse and broadly in the internet using these technologies. And that will be quite positive for the world. Like all powerful technologies, it's a double-edged sword. But broadly, the inspiring vision of Web3 has not changed, and it will come to pass.
Is there a world where the vision of Web3 comes to pass, but the utility of tokens never comes to fruition?
100%.
Yeah?
No.
Comes to fruition. I mean, it depends on what you mean by fruition, but I think that where we end up, again, is like we're starting to kind of peel back the onion. I think we end up with a tokenized crypto world, and then we end up with a non-cryptocurrency world. And Spartan Network is kind of is the first stab at that. I think we see a whole fully blown, fully articulated ecosystem of public chains which have cryptocurrency removed, because that's actually what I think a lot of enterprise and governments actually want. Yeah. They want to use blockchain technology. They're happy if it's decentralized. They're happy if it's transparent, even anonymous, but they just don't want to have to deal with cryptocurrencies if they don't have to, or if the value proposition isn't strong enough. And I think that in too many cases, unfortunately, a lot of the dApps out there haven't proven that the value proposition of tokens is worth it to overcome the friction, to overcome the regulatory risk, the additional cost and custody, et cetera. And so people are starting to remove tokens. They're starting to charge stablecoin and charge cash, and we get that. So I think you end up with 50-50.
I would take the contrarian side of that and say that because of the velocity and lack of friction of value exchange that tokens offer, the way that they make capital more efficient in that way is just so powerful that people will deal with all of the other things to keep tokens in the game. Because at the end of the day, if you give a man a lever and an incentive, he can move the world. And the way that tokens can program financial incentivization into various things like games or art or other things is just far too compelling for our society not to explore.
Very, very interesting.
I'm going to
Darius?
lean a bit on Jehan's side because from a financial perspective, there is a limit to how much you can disintermediate the markets or tokenize market without, sort of giving up capital efficiency. So I think there's always going to be a place for intermediaries, even in a tokenized market. So, there will be this sort of dichotomy, like Jehan mentioned.
Interesting. And I guess to Ryan's point, like Ryan, you're talking about just kind of programmable money and the benefits that provides. Presumably, a lot of that could be done on ETH, and then it could just be stable coins that are running on ETH. So maybe there's one token that's the underpinning. We only have a few minutes here, so let's do one more kind of shotgun question round, shall we?
Sure.
So going back to the FTX saga, we've talked at length now about how a lifetime in crypto is really short, right? People come, they go, and then they come back. And so we're all focused on Sam. Sam seems to have made a lot of mistakes. Whether there's fraud, whether it's illegal, is yet to be seen. We'll know soon, perhaps. But I saw Kevin O'Leary earlier today being asked the question of, would you fund Sam's next venture? Would you do it? Kevin said he would. And so I'm curious. Jehan, would you do it?
No, 100% no.
No.
No, because the guy lacks integrity.
Yeah.
I'm sure he's going to make money.
Yeah.
But that's not the kind of money that I want to make, and that's not good for my brand, and that doesn't kind of align with like my values and why I'm in this space. Like, if I want to just make money and only make money, then I would invest in every kind of crappy project out there and just kind of pump and dump it all. But as pragmatic as I am about the future, I agree with Ryan, and I believe in the values, and I came from the values that we that started the space, and that's kind of the line that I draw. So no, I 100% wouldn't back that guy.
100% no. Darius?
I was offered FTX equity back when we first started.
Yeah.
I said no then. I'm probably going to say no again.
No. Ryan?
So I also passed in the seed round, and it would be the same reason that I would pass now, is that Sam and his cabal were very famous for loading up on Adderall and amphetamines. And I think that broadly this is a wretched drug that clouds the mind, lowers empathy, and that's why you see these kind of sociopathic tendencies. And so we don't hire people that take these types of drugs, and I think broadly this is contributing to the mental health pandemic that is gripping our world, and we need to have a really significant conversation both within our industry and in our society about the mental health effects of these unfortunate drugs.
I think that's a great point. So we have no, and no amphetamines. All right. Thank you all for listening. I hope you enjoyed the conversation. Thank all three of you for joining us here today, and I hope you guys enjoy the rest of the event.
Thank you.